What a challenging and volatile housing market we have right now. So for example, average mortgage rates nationwide have reached a new record high due to high interest rates and high home prices. Now, speaking of home prices, the national median sold price is only $5,000 shy of the all-time record high that was set back in June 2022. On the other hand, some leading indications of home buying demand are pointing to a slowdown in our US housing market, like I explained in my previous video. I'll provide a link in the video description below for that as well. So I have a lot to share in today's video. This is based on Redfin's latest housing market update. So let's begin. This was just posted on April 11th, which is today at the time of filming this video. It says monthly payments set a new record and buyers' costs will likely stay high on inflation news, like I shared with you guys in my video from about 2 days ago. Anyways, it says the median monthly US housing payment hit a new all-time record high of $2,747 per month during the 4 weeks ended April 7th. That's also up 11% from 12 months ago. Housing payments are soaring because home prices and rates are high. Now, speaking of rates, I want to share this with you guys because as of Thursday, which is today, the average 30-year fix increased again, rising by 3 basis points compared to Wednesday. Now we're at an average at 7.37%. The highest rates we've had going back to mid-November last year. Also, FHA and VA loans is around 6.75%. 1 year ago this time, we were at 6.52%. So rates have increased by approximately 85 basis points compared to 12 months ago. So this is coming off the crazy gain we saw on Wednesday after the Consumer Price Index, or the CPI report, was announced, which showed that inflation was not winding down. On top of that, it rose more than what the street's forecast was as well. That's why rates increased big time, up by 28 basis points in one single day. Looking at pre-COVID levels, there was only one other time in which rates increased that much in one single day. That's a giant increase in rates. In any case, you can see here, rates have shot up this week. We're now at 7.34%, the highest average 30-year fixed rates we've had going back to November 20th last year. So of course, because of this high interest rate environment, and of course, because home sold prices are only down by about $5,000 compared to the highs we saw in 2022, it makes sense that we have all-time record highs for average monthly housing payments. It says prices are staying stubbornly high because there is enough home buying demand to prop them up. In other words, Redfin's saying here that demand is outpacing supply. So I read this article and I have a kind of a different take compared to what Redfin has to say here. But please let me comment below your thoughts regarding this, because I'll provide a link to this article in my video description. So I don't want to make this video and confuse you guys, because there's conflicting reports. Let's just say that. So the resale market for existing houses, which is this report that Redfin's covering here, it excludes brand new home construction, just like Realtor.com as well. In general, their reports also look at existing houses as well. So the resale market of existing houses is far different compared to brand new home construction. There's that, which I'll share some stats regarding that. But on top of that, home prices could be up in one area, but they could be down in another area, or they could be flat in another part of the United States. So real estate is local. So the trends I'm sharing in today's video are on a national level, average, and also median stats for the nation as a whole. So every market is different, right? So regarding the vastly different housing markets for existing houses compared to brand new home construction, I have some thoughts to share regarding that. Let's first talk about brand new home construction, because when looking at the peak for home prices for brand new home construction based on data from the US Census Bureau, the all-time record highs was around $500,000 that was set back in October 2022. In fact, let's just look at Fred's graph here. So here's a good Uncle Fred. The all-time record high back in October 2022 at $496,800. That was the median sold price for a brand new single family house. But as of February, the most recent stats we have from them, we're at just over $400,000. This means the median sold price has decreased by nearly $100,000 from the peak of 2022. On top of that, over the past 12 months, when the prices were at $433,000, this means that the median sold price is down by 7.6% on a year-over-year basis. Again, we're talking about brand new single-family houses. Much, much different compared to the stats of existing houses. Now, part of the reason, or I should say, one of the main reasons why home prices for brand new houses have been decreasing is because of this right here. Here is inventory levels of brand new houses for sale. And of course, the source here is a US Census Bureau. So excluding October of 2022, when at that time there was 466,000 brand new single family houses for sale, but these could be dirt lots in which the builder is going to start building once they get an offer accepted. They could be houses under construction, or they can be completed houses as well. But overall, there's 463,000 homes for sale or brand new houses for sale nationwide. So besides October of 2022, at 463,000, this is the highest levels going back to March of 2008. In contrast, in the existing housing market for the resale market, vastly different stats here because home prices are only $5,000 shy of the record highs compared to $100,000 less for brand new houses, but also inventory levels, even though they're up on a year-over-year basis, up by 23.5% year-over-year, according to Realtor.com, we're still far below levels in 2017 through 2019. So we have about 39% fewer houses for sale or existing houses for sale compared to pre-COVID levels. On top of that, the rate of increases of inventory has been relatively minimal so far. This is much different compared to the spring and summer months of 2022, where inventory was absolutely skyrocketing, which caused home prices to fall big time as well. So for these reasons, real estate is local, and of course, big differences between new houses versus existing houses. This is why we're seeing this report from Redfin showing that home prices are very, very close to record highs as well. One more thing I want to touch on in today's video regarding this is that, again, I don't want to confuse you guys. I want to try to make this as transparent and also to kind of share my own perspective regarding the stats we're seeing in today's video here. But also, when talking about any stat that has to do with a closed home sale, this would be days on the market, the average sale price to final list price ratio, closed home sales, and also the median sold price. These are all lagging indications of home buying demand in our US housing market. This is because, let's just say a house closed escrow today. Approximately 30 days prior to that, the home buyer probably got their offer accepted. Let's just say that an average period in which you get your offer accepted until you get the keys to your house is approximately 30 days. So if you close on your house today, which again is April 11th, approximately 30 days ago, back in March 11th, you got your offer accepted. So therefore, when talking about any stats that have to do with a closed home sale, that's a lagging indication, approximately what our housing market was like approximately 1 month and maybe even 2 months ago. And what was our housing market like approximately 1 and 2 months ago? Of course, interest rates were lower than the 7.3% rates we're seeing today. And I mentioned that because this is going to have a lagging effect, or I should say these higher interest rate environment is going to have a lagging effect on the stats I'm sharing in today's video, especially regarding anything that has to do with a closed home sale. In any case, I just want to share that because I read this and I was thinking, gosh, I don't want to confuse anyone and I really want to provide value to you guys. So hope that makes sense. Please leave me a comment below if you guys have any questions. and I'll do my best to answer all of your questions as well. Anyways, let's get to back to this report here. It says rates, the other driving factor rising up, housing payments remain elevated because the Fed has kept interest rates high so far this year. We all know that. Daily average rates jumped to their highest level since last November this week because the March inflation report was hotter than expected. We all know this because the CPI report, or the consumer price index, came in hotter than expected, just like my video I posted a few days ago. Anyways, according to Redfin's economic research lead, she stated the following. For home buyers, the latest CPI report, or consumer price index, means that rates will stay higher for longer because it makes the Fed unlikely to cut interest rates in the next few months, which is exactly what I said in my video, because I shared how the street overall right now is forecasting for only 1 to 2 rate cuts this year. Whereas, at the beginning of this year and also late last year, everyone was talking about how we're going to see a rate cut starting in March this year, and we're going to see 3 rate cuts this year. But the data does not support for any rate cuts by the Fed anytime soon because inflation is not winding down. Okay, let's change gears slightly here and talk about these weekly stats from Redfin, which covers the 4 weeks ended April 7th this year. And by the way, their weekly data goes back through 2015. They look at 400 plus US metros. So on a national level, over the previous 4 weeks, the median sale price was $378,250. That's an increase of 4.5% year over year. Again, for brand new houses, we're down by 7.6%, but for existing houses, increasing by 4.6%. Also, when looking at the median asking price, this means that half of the houses listed for sale are asking for a price higher than this, and half are asking for a price lower than this. That's the median sold price, or median asking price, is at $410,950. And by my dumb math, that's a new all-time record high. Higher than the peak we saw back in the summer months of 2022, which just kind of blows my mind. But what I will say though, is that just because you ask for a high home price for your house does not mean you're going to get that price. So what I found to be interesting, which you guys should be aware of as well, is that even though the asking price, or the median asking price, is at an all-time record high, the share of price reductions is at least a 3-year high as well. So perhaps we have some overzealous home sellers who are trying to set a new record for their house, but they're seeing that they have to reduce their asking price in order to get a home buyer. In any case, this is a new record high and up by 6.5% year over year. Also the biggest yearly increase since October of 2022. Let's take a look at 2 charts here. So the median sold price, again, only $5,000 shy of the record highs that was set back in June of 2022, which is absolutely crazy. What caught my attention is that the red line is 2022, the orange line is 2023, the blue line below here is 2021. So the rate of increases of home sold prices has been more or less in line with what we saw in 2023. We're not seeing this giant run up in prices like we saw in 2022, but we're getting very close to reaching all-time record highs. Again, the leading indications of home buying demand are pointing to a slowdown in our housing market. So if you guys missed my video that I posted right before this one, take a look at that as well. Also looking at the average, or not the average, the median asking price, way higher compared to the peak that was set back in 2022, before this year. In 2022, the peak was at $400,000. Now it's at nearly $411,000. Let's also take a look at the metros that are faring the best regarding prices, and also the metro that is down from 1 year ago. That metro that is down year over year is San Antonio, Texas, once again. So 49 of the 50 most populous metros have experienced gains. So for example, Anaheim, California, up a whopping 22.2%. Can you say real estate is local, right? West Palm Beach, Florida, up by 17%. Pittsburgh, San Jose, California up by 13.9%. The median sold price there, well over $1 million. So up by nearly 14% says a lot. New Brunswick, New Jersey up by 13.9% as well. In regards to average monthly housing payments, here's a look at this. All-time record highs again, right here, higher compared to the previous peak, which was set back in October last year. Back then, the average 30-year fix around 8%. Now it's at 6.82%. By the way, that rate at 6.82% was the weekly rate according to Freddie Mac last week. But today, Freddie Mac announced that the average 30-year fixed rate increased to 6.88%. So next week, we will likely see another week in which we have all-time record highs for average housing payments as well. All right, let's change gears slightly here and talk about pending home sales, a measure of contracts being signed between buyers and sellers, and also look at newly listed houses, as well as active listings or housing supply and the month supply. So pending home sales decreased by 4% year over year, whereas new listings rose by 14.1%. So demand going down, new listings going up. Again, this is a lead indication of home buying demand because if new listings are increasing by 14% during a very strong housing market, we would assume that pending home sales would also increase as well, but we're seeing exactly just the opposite. Meanwhile, active listings rose by 8.2%. Before I share those charts, let's have a look at how each of the 50 most populous metros fared. The biggest increases of pending home sales from 12 months ago, San Jose, California, up by nearly 23%. Then we have San Francisco, that surprises me, Cincinnati, Milwaukee, and Seattle. In contrast, the biggest decreases were Atlanta, Houston, Nassau County, Fort Lauderdale, Florida, and West Palm Beach, Florida. In regards to new listings, that increased a whopping 56.8% year over year in San Jose, California. So pretty wild that San Jose, California, in the number 4 spot for the biggest increases of prices, number 1 spot for pending home sales, and also the number 1 spot for newly listed houses as well. After San Jose was Sacramento, California, where of course I live and work as a real estate agent, up by nearly 40%. Then we have Austin, Texas, Jacksonville, Florida, and Oakland, California. In contrast, the biggest decreases of newly listed houses was Newark, New Jersey, Milwaukee, Chicago, Providence, Rhode Island, Atlanta, and Cleveland, Ohio. Let me pull some charts for you guys. So pending home sales, again, down by 4.4%, but this is at least a 3-year low as well. So here's 2021, 22, and in orange is 2023. So the level of pending home sales, at least a 3-year low, which implies that closed home sales in the next 1 to 2 months will be relatively low as well, a leading indication of home buying demand. Also, new listings increased by 14% year over year, also a little bit less than the levels we had back in 21 and 22 though, but up by double digits on a year-over-year basis. Meanwhile, active listings were relatively flat compared to the previous week, but we're still at least a 3-year high as well during this time frame. One more thing I want to mention regarding pending home sales, I almost forgot this because going back here, the level of pending home sales, again, at least a 3-year low during the same time frame, but pending sales actually decreased compared to the previous week. Whereas every single year thereafter or before that, pending home sales were flat or they were going up. And again, this is spring home buying season. So it's going to be really interesting to see what happens in the next couple of weeks because if this goes like this, that'd be a signal of a very weak housing market because during the spring home buying season, the level of contracts being signed, of course, should be increasing, right? All right, let's have a look at the month supply. The month supply is at 3.2 months, at least a 3-year high as well. Obviously much higher compared to the lows that was set back in the spring months of 2022. What else I want to share with you guys? Days in the market is at 37 days. This means it's taking a little bit faster compared to last year, but houses on average are selling slower compared to 21 as well as 2022. Back in 2022 this time, it took around 23 days to sell a house. Now it's at 37 days. Also, here's a look at the share price drops, basically going straight up all year, and also a 3-year high as well. Much higher compared to the lows we saw in the previous several years. All right, 2 more slides. Here's the average sale price to final list price ratio. That ratio is at 99.1%. This means for all the houses that sold over the previous 4 weeks, they sold on average for 0.9% below the seller's final list price. Much lower compared to the 102% share we saw in 2022, when at that time, houses sold for 2% over asking. Now they're selling for about 1% below asking. So last slide I want to share with you guys is Redfin's home buyer demand index is at least a 3-year low as well, and also down by 6% on a year-over-year basis. This, by the way, is an index which measures the amount of requests for home tours and other home buying services that Redfin is receiving from home buyers. So at least a 3-year low as well, and down 6% on a year-over-year basis. So please comment below your biggest takeaways from today's video. I appreciate you guys for watching today's video. Like and subscribe, and we'll see you on the next video. Have an awesome day.